Bit of a positive move on the market today, but really wrapping up 2 days of quite extreme volatility and quite extreme drops on the markets globally as well.
Correct, Stephen. We saw a movement or a reduction in risk aversion from mixed data coming out across the globe, and that really has put pressure on our markets, with commodities really pulling back globally, and that obviously affecting our commodity stocks and putting pressure on our local markets.
Well, interesting to see those commodity prices seeming to do okay today, and that's despite China raising reserve requirements for banks for the 8th time yesterday. Those commodity prices doing okay today, and that's of course giving our resources sector quite a boost.
Correct, Stephen. Nedbank speculating that it is a combination of two factors. One, that commodities, after we've had this massive pullback, there's a bit of bargain hunting. And secondly, there is speculation that because of the fact that we've seen this 8th increase in the reserve rate, that we are unlikely to see more aggressive rates coming out, because the increase is really creating hot money, and we're seeing a lot of flow moving into a lot of cash moving into yuan. So that's really contributing to that.
We've also had some GDP data starting to come through from the European Union, the eurozone in fact, and this is first quarter first estimates. We've had Germany's economy growing by 1.5% and France growing by 1%, so it looks like some of those GDP numbers out of the eurozone aren't too bad at all.
Correct, Stephen, and those really the two countries that are pulling the eurozone stronger, and they have been. We've seen only slightly on the manufacturing side, where we've seen a bit of a pullback, but we have seen good employment numbers, and those two countries really holding up the eurozone, and that has pushed the euro stocks high to that, also just really supporting those commodity prices, as you indicated.
Well, all eyes on the United States this afternoon. We have CPI data coming out. We also have the University of Michigan Consumer Confidence Index, and both those, I'm sure, are market-moving factors.
Correct, Stephen. In terms of CPI, they're expecting the CPI numbers to come out slightly lower, as we saw retail sales disappointing. But in terms of the University of Michigan numbers, they are expecting a positive number, and we've seen the S&P futures really positive there. We saw mixed data in terms of job numbers, and that number will really set a tone as to how they're going to end the rest of the week, if those numbers in terms of the confidence numbers positive, and that's really what we're looking for this afternoon.
We had our own Reserve Bank yesterday downgrading growth for this year and upgrading its inflation expectations. It now expects inflation to reach the top of the target band in the fourth quarter of this year and actually head above that 6% level in the first quarter of next year. So inflation, I mean, this is really illustrative of some of the inflation problems we're seeing, particularly with emerging markets.
Correct, Stephen, which was obviously positive in terms of interest rates, in terms of them remaining flatter for longer. But we also saw this morning with the eurozone also coming out to say that they're going to be moving their inflation targets, and just solidifying the fact that inflation is a real concern globally as well as locally, and that's why we're seeing a nice move on the gold price today.
Well, we've seen quite a lot of retailers in the news this week. We had Massmart out at the beginning of the week with the trading update, Spar out with numbers this week, and those numbers not being taken particularly well by the market. And of course, all eyes on the Walmart Massmart hearings at the Competition Tribunal. Let's start with Spar, though. Those numbers, what did you make of them?
I think it was a fair set of numbers, Stephen. I think what they did say, however, is that they're very cautious going forward, and they're highlighting that inflation is going to be a concern going forward, and very, very real for them. In terms of the Walmart, we'll have to see how that plays out. I think it might be the last day, or Monday we'll find out the final hearings and the results out of the Competition Tribunal.
That's right. So, yeah, closing arguments on Monday. And I mean, it seems to be growing concern that this deal might not go ahead, or if it does go ahead, it might have quite a few restrictions placed on it. What are the implications if this deal is rejected by the Competition Tribunal?
I think the most important consequence really will be it will have a very negative effect on the rand, and it'll set a tone for a negative tone for further future capital inflows. In terms of restrictions, we'll have to see how if it does go the restriction route, if Walmart is happy with the restriction, if they're going to walk away. But really, it is going to impact our growth going forward, capital inflows, and really inflation will be impacted too.
And I should imagine it'll be good for some of our other retailers if Walmart doesn't enter this market.
Yeah. In fact, ShopRite will probably be the most affected, because speculation is that Walmart is using South Africa as an entry point into Africa, and ShopRite really has the biggest presence in Africa. So they've really come out vocally to say that they would have to increase their imports to compensate or to really compete with Walmart. So really, ShopRite at the moment really fighting hard and under pressure should it actually go through.